Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 strong buy perfect 10 stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that not only have a strong buy consensus from Wall Street, but also score a 10 out of 10 on the TipRanks Smart Score. That of course looks at 8 unique factors and predicts the stock's likelihood to outperform the overall market. We found today's stocks using the TipRanks Stock Screener. Found under research tools on the TipRanks website, we're looking for that 10 out of 10 smart score, along with some double-digit upside and strong buy consensus from analysts. So today we're going to take a quick look at these companies, what it is that they do, and of course what Wall Street is predicting for those stocks' future. You can follow along on the TipRanks website or by downloading the TipRanks mobile app using the links in the description down below. Now let's get right into our 3 stocks. We're going to kick things off today with a company called Kemper. Trading under the ticker KMPR, they're currently priced at $53.82 per share. Now, overall in the past year, they are down 1%, but have been climbing recently, up 24% in the last 3 months. Their 10 out of 10 smart score does come with some increased insider transactions and very positive crowd wisdom. With approximately $13 billion in assets, Kemper is a giant in the insurance world. In fact, the Kemper family of companies is one of the nation's leading specialized insurers, providing affordable and easy-to-use personalized solutions to individuals, families, and businesses through their auto, personal insurance, and life brands. They serve over 5.1 million policies through approximately 25,000 agents and brokers. Kemper shared their most recent earnings report near the end of October, and they did come out with mixed results, posting a bit of a wider loss than expected, but beating on revenue. Kemper reported revenue of $1.2 billion, which did exceed expectations, while their loss per share of 44 cents was wider than anticipated. However, for the fourth quarter, analysts are anticipating a positive earnings per share of 37 cents. Management did note that they had another quarter of improved underlying results, positioning them for a return to profitability, which is perhaps what has analysts feeling bullish on the stock. Just a few days ago, TD Cowen initiated coverage on Kemper and even named it one of their top picks. They said that the company is set to approach or attain underwriting profit, and the magnitude does not seem to be fully appreciated yet. Kemper should trade at a higher PE as a loss ratio improves and restructuring progresses. The stock does just have 5 current analyst ratings, but they do all come in with a unanimous buy. And that strong buy consensus comes with a price target of $64.20, which would be an upside potential of over 19% from current prices. Looking at our detailed list of ratings down below, we can see that initiated coverage from TD with an upside of 30%. On the low end, Piper Sandler comes in with an upside of 4% and a high-end price target from JMP Securities with an upside of over 39%. Second on our list is a company that is fairly new to the public markets. That is Knife River. They trade under the ticker KNF, currently priced at $64.48 per share. They just began trading at the end of May in 2023 and have gained 71% in that time period. Over the last 3 months, they're up nearly 23%. Knife River was the result of a spin-off from MDU Resources. They focus on construction materials and contracting services in the United States. They are a vertically integrated construction materials company operating in 14 states, and they are the 5th largest producer of sand and gravel in the country. They have 188 aggregate sites totaling over 1 billion tons of reserves. And in addition to being a leading supplier of construction materials, they're also a provider of contracting services. They perform construction in 12 out of the 14 states with a business mix heavily weighted to public sector projects. While they don't have many earnings reports under their belt as a fairly new publicly traded company, their last quarterly earnings came out in November and they had a pretty comfortable earnings beat. For their third quarter, they reported earnings per share of $2.58, well ahead of the $1.86 expected, and revenue came in at $1.09 billion. The company achieved all-time quarterly records for revenue, net income, EBITDA, and adjusted EBITDA. Based on these results, they increased and narrowed their full-year guidance. Management commented that they remain optimistic about the long-term strength of their markets, including the positive impact from local, state, and federal funding. As of August, nearly $80 billion in funding from the Infrastructure Investment and Jobs Act has been allocated to projects in states where Knife River operates. As the new kid on the block, they haven't attracted a ton of analyst attention yet. They do just have 3 current ratings, but all of them do come in with a buy, and 2 out of 3 of those are 5-star analysts. Their average price target comes in at above $78 per share, which would be an upside of 22%. Down below, we can see the most recently initiated coverage from January with an upside of 25%. On the low end, we have one from back in December with an upside of 16%. And third on our list today, we're looking at PPG Industries. They trade under the ticker PPG, currently priced at $145 per share. Overall, in the past year, they're up over 11%, including gains of 13% in just the last 3 months. Their 10 out of 10 score has also seen some increased hedge fund activity. PPG manufactures and distributes paints, coatings, and specialized materials. Founded back in 1883, PPG Industries is the world's largest paints and coatings company. They have over 52,000 employees operating across 70 countries, supplying paints, coatings, optical products, specialty materials, chemicals, glass, and fiberglass around the globe. They also hold the honorable title of being a dividend king, having increased and paid their dividend for about 52 years now. Their current quarterly dividend is 65 cents per share for a dividend yield of 1.72%. In their latest quarterly report, they did come out with an earnings beat, but the next one here is coming up soon in just a few days on January 18th. For their fourth quarter, analysts will be anticipating earnings per share of $1.49, which would be an increase over last year, and in the previous quarter, earnings per share came in at $2.07, easily beating expectations. The company also saw record third quarter net sales of $4.6 billion, which grew 4% year over year. As such, the company did raise their full year earnings per share guidance as well. The stock does come in with a strong buy consensus based on 15 current analyst ratings, and in the last couple of weeks, we've actually seen a handful of analysts increase their price targets. With 12 buy ratings and 3 holds, the average price target comes in at $161 for an upside potential of nearly 11%. And down below, we can see several of these analysts here have been increasing their price targets. On the low end, we do have a hold rating from back in October with a downside of nearly 7%. More recently, a lot of price targets in the teens there, with a high-end price target of over 20%. So that is a quick look at 3 stocks that score both a 10 out of 10 on the TipRanks Smart Score and have a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you're always doing your own research and due diligence. Thank you so much for watching. Have a great day, and I'll see you back here next time.